We had expected 50 over the course of this year in May and August, and that was delivered by the RBA. We think they go into a period of pause and assess now, and certainly there's nothing further to do this year. The reason that we think they've got more to do in 2017 is that the currency has started rallying through the course of the year, and that's most unusual when central banks are actively cutting interest rates. And it does leave the RBA snookered to some degree. But the reason for our pause is that obviously Lowe comes to power as the new governor of the bank. He had written a lot of academic work back in his days at MIT around using monetary policy to fight disinflationary periods and the asset bubbles that can blow and some of the unintended consequences that brings. So we would probably expect to see some further macroprudential legislation come into parts of the investor property market. I think clearly there are parts of the Australian property market which are extremely hot right now, and there's parts, particularly out west, which are probably suffering a little bit. And so trying to find a rate mix that fits everybody is difficult, but using macroprudential could be a way to try and engineer that. But we absolutely believe that the RBA have more to do, and we would fully expect rate cuts probably in Feb next year. And I believe bond markets, although very exciting over the last few weeks, will calm down. Now we're broadly in a range environment. Clearly we're finding a new valuation range inside of that environment after what we'd said has been tremendous performance, particularly since Brexit. Yields are now as attractive as they've been since Brexit, despite the fact we've had that additional August 25 basis point rate cut. So the valuation has certainly improved significantly, and for investors that see this as a long-term investment and want to spend time in the market, they should absolutely look at these levels. Clearly, if you invested last week, there's been a bit of a drawdown, and that's unfortunate. But it is a financial market that moves up and down. But I think the thematic in the medium term is still absolutely around lower term structures and lower interest rates, not only in Australia but globally. And we're seeing that over the course of this year. We've had the Bank of England cut, the RBNZ cut, the ECB cut, the Bank of Japan cut, and of course the RBA. So as much as the Fed are trying to go the other way, the momentum globally is still absolutely lower.